Market can sometimes be fairly confusing, and not every single day it is easy to find a good pattern. But there is one tool in our toolbox that we can use as traders to make sure we are following the price action properly. And that is we're going to use our trend lines, more specifically shortened trend lines that will keep us on the right side of the market. And no, trend lines are not as subjective as you may think for the first thought of hearing about this, because there is a rhyme and reason how price action moves, and there are rules on how you draw your trend lines. And number one rule you will need to think about and keep in your mind while you're trading is that after price will break the trend line, new extreme is most likely going to be retested. Now, you don't draw these trend lines just for the sake of it. You draw these trend lines so you know where the high probability setup will occur. And high probability setup is a two-legged pullback, second entry. It seems fairly easy that this is going to be a high probability setup, but this depicts a human behavior and it will work. Now let's talk about how we would draw our trend line on the structure today, because when we draw short-term trend lines, we want to draw them as tight as possible. As you guys can see, this is a nicely fitting uptrend. We have a break of this uptrend, and according to price action rule, the new extreme is most likely going to be retested. And you have a break, new high, pullback, another new extreme, pullback, another new high. When you guys can see the price keeps making new highs and new highs, that means that there is a most likely a bigger pattern in play, because this overall move is way too big for this tiny little uptrend. So what I'm going to do, I'm going to extend the trend line just slightly to make sure it fits better. And as you guys can see, it now is working nicely in this uptrend. Price really fits nicely in this uptrend. So this is a bullish uptrend. Now, we are drawing the trend lines with the direction of a trend. The same thing we need to do against the direction of a trend, the counter trend wise, because we want to see when the downtrend played out. In this instance, you have a downtrend working lower and it didn't play out because there's a break, but there is no new extreme because this trend line was too strong. So when there is a new extreme and there is a new downtrend, but look what you have a break and a new low. So that means, according to trend line rules, the price action, that this downtrend played out with the break and new low. Not only that, this is a two-legged pullback. This is this pattern right here and is located where? At the EMA, which is a key entry point, overall in the direction of a trend. So this would be a high probability pattern. I'm just marking it only as an example because your stop loss will go one tick below this swing right here. And this is not good risk to reward ratio. This is just an example entry. Now we have a break of this uptrend. So we are most likely retest expecting the new extreme. So we're looking still for reasons for market to push higher. A new high was formed right here. And after you see a market creating a new extreme, there are two things that can occur. Either market can go into a correction for let's say like 30 minutes at least, or market can straight up reverse. So when you see new extreme right here, you're no longer expecting for price to keep working higher in bullish direction. You guys can see you have a new high, and as the market keeps pushing lower, my first drawing for the trend line was something like this right here, because I want to see price once again fitting inside of this channel nicely. And you guys can see market kept really overshooting it, so I had to adapt, and the trend line ended up being something like this, because the way I draw it was way too short term and market didn't really fit nice. And look how price is nicely fitting now. As you guys can see, you have a new extreme that was formed, and you have a first entry long, price pushed below EMA, confirming the bearish momentum, confirming the reversal that after new high was formed, and a second entry long failure. This is a high probability pattern. You may be wondering why, when a two-legged pullback, this is not really a two-legged pullback, this is actually a failure of a two-legged pullback. And that is correct. This is a failed second entry long. But why this two-legged pullback failed? It failed because price, the uptrend already played out with the break and a new extreme, and then we are expecting a correction or straight up reversal. In this instance, strong push below EMA indicating reversal. So this is a high probability setup. I didn't take this trade myself. I didn't really recognize it yet, but this is a high probability setup here. And market just pushed lower. As you guys can see, it is nicely fitting inside of this trend line. You have a little overshoot of this trend line. An overshoot a lot of times lead to break of a trend line or either straight up reversal. You have to understand that the overshoot is not unnatural activity in the market, and traders will act upon this. Okay, so once the market is working in this trend line, what you're doing, you're looking for high probability setup and you're looking for second entry short, where you're looking for this two-legged pullback, and price created a new low, and you have a first entry short, pullback, second entry short, and this is this high probability pattern. However, once again, don't forget, you have to draw the short-term corrections in the opposite direction, short-term trend lines in the opposite direction as well. And here you guys can see that the price didn't really play out yet. This short-term uptrend is still in play. So I'm going to mark this entry as an aggressive entry because you are at the key entry point. You close below on a nice bearish bar, and after first break of this downtrend, you're expecting a new low to be retested. So this is slightly aggressive because you have to respect this uptrend. Price broke this uptrend, formed a new high, and look, it never looked back. Nothing is 100% in price action. This was attempt to create a new extreme, and this is sometimes enough. That doesn't matter because you stopped selling, because as price keeps pushing above the EMA, that is indicating bullish momentum, and there is no bearish bar anyway. So there is even not a chance to sell. You just watch here the market go without you, and the market keeps pushing higher. And the same thing that happened right here is happening right here. There is a break, there is new extreme, another break, another new extreme, and you just keep pushing higher and you just keep pushing higher. So that means that there is most likely a bigger pattern in place. So what I'm going to do, I'm going to draw this trend line, and I'm going to have a slightly larger trend line here. Okay, and you guys can see we have a new extreme form right here. I'm looking for the same thing as I'm always looking. I'm looking for the high probability to like a pullback. So I'm going to draw my short-term trend line in the opposite direction as well. And this is the exact same pattern that happened right here. You have this downtrend, you have a break, and you have a new low. Where coming off this trend line, I'm using the short-term trend line rules to tell me that this downtrend played out. Price closed above the EMA. This is a nice big bullish bar, and this is a high probability setup that I personally took. This is my first trade for the day, and a lot of traders in Discord took this trade. This was a gorgeous entry, and price created a quick, easy scalp. Now, as the price formed a new high right here, and we are getting very close to this new high, I actually have it a little bit right here because you guys can see there's a micro double top right here, and it confirmed this bounce right here. We're getting dangerously close to this resistance, but we still have to follow the trend line rules. We have a first break of this uptrend, so we are expecting a new high to be formed, and we have a new low right here. You have a first entry short, pullback, second entry short, but you're going long directly into this resistance. When you're counting from the highs, new high, first entry long, pullback, second entry long, it closed above a bearish bar, so there is no entry, and market just keeps pushing higher and keeps pushing higher. There's just a bunch of first entries, and you have the same situation you had initially right here. You have the shorter term uptrend working higher, and you keep making new highs and new highs. So that means there's probably a bigger pattern in place. So what I'm going to do, I'm going to draw my channel like this. Okay, and you may be asking me, okay, but here you have a break new extreme and you have a reversal. Why don't you have a here break new extreme and you have a reversal? This is just one of possibilities. Market will correct and either resume, or it will straight up correct and then reverse. Okay, but you don't sell if the market is not giving you the clues to sell. Okay, the market is still chopping above the EMA. You still keep making higher highs. So even though you have a new extreme, you're not selling. Here you can be selling because market strongly pushed below EMA and gave you the reversal pattern. Okay, here you're just continuing pushing higher. So there is no sell and there is a sell here. It's all in the momentum of the EMA. Here the market keeps nicely pushing higher. Now the market keeps working higher and you have a new high. You have a first entry long, pullback, second entry long. There's a little bit shortened trend line like this, but at this point on, market is looking very congested. You guys can see there are a bunch of bars stacked right next to each other. It is quite a bearish bar. This is a very aggressive entry. I don't like it as much. You know, I'm going to mark it, but personally, I didn't take this trade, nor I like it too much because you're going long very close to the high of the day. There is not that much of a room, and it looks like we're very close to all-time high, or we're creating the all-time highs. So I personally skipped it, but take a look. You're at the bottom of the congestion and you're coming off the key entry point in what it looks like is now a strong uptrend. Okay, and market keeps pushing higher, and once the market keeps pushing higher right here, you're just focusing on reasons to buy. You're not picking top because that would be a counter trend entry, and that is not smart. The market keep pushing higher. You have a new extreme, your first entry long, pullback, second entry long. You can draw the short-term trend line, but you're far away. This two-legged pullback is far away from key entry point, so you're not taking this anyway. You have a first entry long, and look what you have here. You have a new extreme right here. So what I'm going to do, I'm going to draw my short-term trend lines because I want to stay on the right side of the market, and I have a first entry long, pullback, second entry long. I have this two-legged pullback, very close to key entry point. At the time when I was watching it, I was coming off this key entry point. So this is this high probability setup, and this was the second trade that I took. And this trade was slightly aggressive because you closed below EMA. You didn't trigger higher above this initial bar. There was a little bearish correction, and this signal bar is a doji bar. Okay, it closed in the middle of this bar. So when I took this trade, I knew that I'm taking a slightly larger risk than normal, and I sneaked in with the limit order. And this is how you want to play. This is such a small signal bar, and trading is about taking a chance. You're a risk taker as trader. It's about trading is a probabilities game. So every single setup you enter, you never know whether it's going to work or not. You just follow the rules, and the odds will work. In the end, you have odds in your favor. So there's a two-legged pullback at the key entry point in a strong uptrend, and this is definitely worth taking a chance here. This one would have failed, and look, it failed, and it took exactly the price where you thought it was going to go initially, and price formed another new low. And when I was watching this, I wasn't thinking about going long yet. Okay, I wasn't thinking about going long yet. And there was this big bullish bar, but we closed below EMA. There was this bearish bar that closed below EMA, but there suddenly was this big bullish bar, and we finally closed above the EMA, which is confirming the bullish momentum. And this looks like a higher low setup. We didn't technically close below this, but this is a hidden first entry, and this was where I re-entered, and I was really contemplating this setup. I was really extremely focused because this was hard to pull the trigger, because you're quite affected by the losing trade. And now you're questioning yourself whether am I following the rules or am I just revenge trading. The main point right here was that there was a nice signal bar on a 5-minute chart. This was the signal bar that finished on a 5-minute chart. Big bullish signal bar, EMA hold prices. So once the signal bar finished, this is where I entered on this bar. This acts as a higher low setup, because normally if you trigger lower and then reverse, this would be a higher low. You don't have to trigger here. It is a little bit hidden, so this is a little bit advanced entry, but it is still in the direction of the trend. Okay, and maybe the trend, my initial trend was correct early, and now we just have a break and a new extreme, even though there are multiple ways to draw it, and I'm still not really sure what is the correct way, because it can easily be like that. But market right now spiked and went into this channel, is right now correcting, but you're below EMA, so you don't want to be buying anyway. Here we are buying because we are at the key entry point. Here we are not buying because price keeps pushing lower, and there is no key entry point for us to hang on. So just focus on the short-term trend lines. They will completely lead you where it need to go. And yes, hopefully you guys find the video useful. I'm going to see you guys in the next one. Take care, everybody.